date line here, so I'll just bring that into focus, is to here, and so that's the November low there at 12, just below 12.5 here, and this is one way to count this situation to the upside here. So it's a reasonably logical wave count as well. So we'd be looking at this as minor wave 1, minor wave 2 here. And then we're looking at minor wave 3 here. Wave 3 is always the longest and the strongest, not always, but majority of the time. And it also will have 5 waves in it. So it can be counted as wave 1 to here, but it just seems to count better as wave 1 to this point here, wave 2 here, and then you can see little 5 wave sequence in here for wave 3 being quite long, and certainly not, wave 3 can't be the shortest in a third wave anyway. So the wave 4 to here, and then a nice 5 waves to here in terms of the 1, the 2, the 3 to here, the 4 and the 5 to here, and then wave 4 to here. So what we're looking for here is we're looking for 5 waves in here, and this is a little bit tricky in here as well. So there's 2 types of counts we could put into here. One is that the top of wave 5 is in now. The other one is that we're still in the third wave here as such here, and there would be this little guy here to go through here. So we just need to be a little bit careful in what we do through here, and the trading levels will price basically will help us determine what's what here. And we also know that the Dow Jones at 5,000, 15,300, the 300 is a minor trading level, so if that's breached, then we know that there's weakness there. And also just below the 15,300 is the 15,272, which is group 2. So I'm just going to go in and have a little look at that as well. The other point here as well that I'd like to make is that wave 5 here is normally quite close to the same length as wave 1 here when we have the extension in wave 3 here. Okay, so that's pretty much what this little line is here. That's the length of wave 1 that I've just put there, which comes in quite sort of nicely from this point. So this particular line through here is the 15,300, and that would be the top of minor group 1. So that's important in terms of support here. Would see the price up at 15,500 from that point. A breaking of this is a sign of weakness, and the next level down would be the 15,272, which is a subgroup level. It's it's subtle, but it's important. So obviously that would sit in this little area through here, and also to the next larger degree of structure. If the 15,200 here, the pivot within group 1, the 1, 2 and 3 here, if that became the retested resistance, then we're still working with the 15,000 at this stage here. Normally we would see when a market is moving, support on top of 15,500, when that's the case, then traders tend to forget about the 15,000, that large number, and they start thinking of the next 5 up through here. So that's where they're sort of focused. Now that comes in, but normally normally there's a correction across the 15.3 here, the top of group 1, which is normally larger than the 15.2 here, and I can see that the corrections have been quite shallow here. See how that sort of come back and tested. This is the classic trading levels pattern here across a level, but that's also sat above that, as this one here has as well. So if it does breach this here, then we can expect a move down to the down into this sort of area here, and that's kind of acceptable, but it is a point of weakness, so it would have to find support back on that. And I would normally expect a pattern like this to sort of develop across the number 3 here, the top of group 1. A retesting of the main trend is sort of what we're looking for, and this is the place to have that. So it is likely to occur here. So let's just see how it sort of develops here. The other side to this as well is that these little corrections here, are typically wave 4 corrections as well. I'm just sort of see if we can get in here a little bit closer through here. I might just go to the S&P 500 here as well, in this particular case, looking at it in a smaller light here. So with the S&P 500 here, this is group 2 here, so 65, 72 and the 80. And look, if the 1672 became the support, then we tested support, so it goes up there and creates the first high and comes back and finds support on it, or does this sort of situation here and then finds support, but then that just creates the long trades, and you go long from there, and you'll look to add on to the 1680 there as well. If the price drops out of this group 2 here, 65, 72 and the 80, and finds that as resistance there, then we need to expect the price back at the midpoint here, the medium trading level here, and this whole little move up here would be treated as the first high above the level of this medium level here, and a larger correction would unfold in the way that the distance above this area here would also be the distance below this area through here. So the 1630 and the group 2 here will become the trading range, and the 1650, the pivot, will become the balance line within that correction there. So we don't have any confirmation of a top being in place here, only just the fact of looking at this wave 4 here, this wave 4 here, this wave 4 here is telling us that there is a possible top forming, but we don't have the evidence, and the evidence would be a clean 5 waves down, a 3 waves back up. Well, 5 waves down is enough to give us that, but also finding that 1665 as the retested resistance there. So look, they're the parameters that you'd need to sort of work in. So first of all, being mindful that there is a bit of a top in play, but it's not confirmed. When we come to the Australian market here, yesterday we were looking at so from this high point here, we were looking at this particular move down through here, and I know that's in 3 waves, so that means eventually that top will be taken out. Now it could go on straight up and taken the top out here and created a 5 wave structure up through there, but as I pointed out yesterday, that we could be in for a larger correction because the US markets are making a bit of a top, and that seems to be the case. So what we need to do here is we need to go an A and a B and a C here, which would make the A wave, and then this one here that would make the B wave back up through here, and the ABC here would be the A wave to here, the A, the B and the C wave here for the B, and then the 5 waves up here for the C wave for the B. So what we're looking for here now is a C wave down through here, and a C wave is always in 5 waves, so we can just put that down here. So the 5 wave structure is reasonably clear here in terms of the 1, the 2, the 3, the 4 and the 5 here, and that should complete that there. Wednesdays can be down in the morning and then up in the afternoon, but in shorting this down through here, if that's a go, you will definitely need the 51.72 as the resistance there to confirm that. Now we're also in wave 4 here, so I also understand too that in a wave 4 triangle patterns occur in wave 4s, okay, and triangle patterns are basically they're a sideways pattern, and they're in 5 waves. In 5 waves in terms of I'll just remove this here if I can, just so it doesn't throw our line of thought out. So a triangle pattern is 5 waves in terms of 1, 2, 3, 4 and 5. Okay, now each wave structure within the triangle is in 3 waves, so we've got the 3 waves here, we got the 3 waves here, and currently we got the 3 waves here. So we must have this wave count on the table as such, so that's the possibility as well. So we've either got the flat pattern here, the ABC regular flat that's not completed, or we have a triangle pattern moving across here. A triangle pattern would actually be better because in terms of a bullish market, because it would the distance that it moves across here is normally the distance it moves to the upside. The normal thing though for the breakout through here is that the length of the A wave will give us the length of the move up through here. But if we can see that a triangle pattern is developing across here, it means that we don't have to wait for the breakout. We'll be able to enter early on the current lows that will be developing through here. So getting some positions under the 5-2 and then some above that. But we can't confirm the triangle yet. We would still need to see the triangle complete itself in terms of well, we'll start from here, those three there, those three there, those three there, those three here, those three here, and then that would be the buying point there. Then we'll get wave 1 here, wave 2, and then wave 3 would be quite strong, you know, the breakout point. So that's why it's important to grab it, to nip it here as such there, and we'll be looking for, of course, 5 waves to the upside through that point there. So it's something to just to sort of focus on, but as it stands today, we could see a little move down through here if the S&P 500 falls out of bed of the 1665, and this one here would collect the stops and then continue to move up through there. Let's check out the commodities. Okay, the copper market here. As you know, pretty much the structure that we've got here so far is that the main thing here is that this move down through here counts as corrective, as ABC, as in 3 waves, a 5-3-5 structure. So that means that that high will be taken out. So as long as this market really stays above the 330, so the 328, say these lows here, because if we do have 5 waves up here, then we can expect an A and a B and a C come down through here before we see further upside. So this is corrective, bullish, positive, and this here is maintaining to be positive as well. So that's obviously creates support for the material sector. So we're cautiously long there, as we've seen with BHP as a bit of a guide stick here. This is the AU, the Australian BHP, and you know, we're looking for a new high above here. Yeah, so this wave 1 here should be roughly the same length as wave 5 here. However, you know, 35.5 is the second strongest number. It may have something to say about that, so as it did here. So this is the sort of classic trading levels pattern that we'll be looking across through here in terms of the arrival, the reaction, the support, the first high above the level, and then some type of ABC correction, and then a move up. The move up through here should equal pretty much the same length here. If it is a third wave here rather than A, B, and C, and A, B, and C will have, the C wave will have some sort of equality to the A wave. If it is a third wave up through here, then we can take this length here and add another 60 odd percent to that. So we could take the length of this and use the extension tool for 1.618 to the upside through there. But always one step at a time, and the next step is to allow the first high to go up through here, and then look for some type of correction through here. You know, that could take a week or 2 weeks, and then a move up there. I mean, if we're wrong, then it could just continue to move straight up, and we've missed that, and you know, you can start cursing me at that stage. But the main point here is, you know, if you're trading shares, you can just buy it. You know, if you're trading CFDs, well, then you've got a holding period here, and the overnight financing is a bit of a killer. Not that you ever sort of see that, but it's ticking over every day at a higher price if this moves up here, and it can be expensive if you're holding more than, you know, 4 weeks, and you do not want to be sitting in a sideways market. Yeah, so that's all tickety boo. The just, you know, I'm just, you know, I talk about the US banks a bit, and we will open up an Elliott wave section on the US banks as well, because they, you know, they're really, you know, for a financial system to work, you need money to flow, and you know, if that's going to be the case, well then, you know, it's obviously going to show up in the banks. That the banks are the indicator in a way. So, you know, we've been talking about this we'll watch this play out, and we watch this ABC thing here, and we're looking for a low, and then we watch this move up through here, this J Morgan here, and it's pulled back and for wave one and up for wave two, and we can see the strong third wave unfold. So it's really unfolding really quite well here. What I'm not quite sure of is this wave one and wave two here, and we're going up for wave three, which certainly looks the case because it's really pushing up strong for third wave, so it's not going to take that long before that's influenced globally as well. And the other banks are not far behind this. They're all, there's leaders and there's followers. The leaders always extend in range much more than the followers, but sometimes the followers are a safer bet, just shorter trading ranges. That's all in terms of the length of the wave structure. Right, that's that. The gold market, which would be the same as silver. So well, yeah, we're looking for the wave 4 here. We're looking for wave 5 to come down through here. And in this move down through here, we've had that rally yesterday. So that was looking for a wave 4 rally to come back into the 1400 there. If we just have a closer look at that, that's the situation there, coming back into that area, the fourth wave of one lesser degree. I don't think this wave 4 is actually finished. I think that we've got an A wave here, a B wave here, and a C wave up through here, then folding down. Wave 4s can always be a little bit complicated, so when we look at this here, just driving in on the 1 hour here, so this move up through here counts quite nicely as 5 waves up through here, so we'll call that the A wave. The B wave normally retraces 61, the golden mean, the golden ratio of that thing there, so that's coming quite nicely at that point there. So what we'd be looking for now is a C wave to the upside, so we'd be looking at whoops, I messed that up. Wave 1, 2, 3, 4, and 5 to finish that, and then we'd be looking to the downside from that point there. So that's a simple wave 4 in terms of a 5-3-5 structure. However, wave 4s can get a bit more complicated from that, so just be mindful of that. Of course, if this market moves back down through here, just continues down through here, then we need to call that wave 4 in there. But this really looks like a 5-wave structure. So when we look at it here on the 15-minute chart here, that move up there, it does count quite nicely as well. That's a nice third wave, isn't it? I mean, that's unmistakable. Fourth wave here is sideways and more complicated than wave 2s are normally sharp and simple, and wave 4s are normally sideways and complicated. That little fifth wave, because we've got 5 waves here, that means that we should get another 5 waves over here. It's that simple. So let's just see how that pans out. That if it falls out of group 2 here, then there's a bias of weakness there, but we just need to be careful there, because if it did do that, then we would probably put the B wave here, the A wave to here, little C wave to here, and the B wave to here, so to speak, if that fell out of bed there. So just be careful about grabbing a short position at that point there, because there can be one more push up through there. Alright, let's have a look at the FX. Okay, the US dollar through here, we're looking at a top of a third wave here, and we're looking at a fourth wave pullback through here. Now, this may be complete. It normally pulls back to the fourth wave of one lesser degree through to here, so we could say 83.50 would be the supporting factor through here. However, we just don't know how complicated it's going to get here. I can see that that's in 3 waves, and it may finish there and climb up onto the 84 and move up from that point, or we may get a little bit more of a move through here before we see further upside here to the 85. Of course, this will be a reflection back into the euro as well, so let's spend some time on that one, and the Australian dollar rather. So the rally off the 128 that we were looking for here, looking for it to come back to the 129.30 area through here. That's all fine. That's all sort of happened through here. The structure up through here is in 5 waves for the A wave. We've got the B wave in 3 waves here, and just looking at wave 1, 2, 3, 4, and 5 here. That top may be in place there. I think I've got a smaller chart here. Just let's have a little look at that here. Okay, right. So This is just a 5-minute chart here. So this is just the C wave. So if I just come back and explain that, so from this B wave here going up through to here, so we're looking at a 5-3-5 structure to complete the move here, and it may come up to, if it makes a new high here, then we have to look at the 129.50 area through here. So we'll be looking to short it from that point there. So with that in mind, this move up through here, we could look at this here just as 5 waves coming up through to here, and that could be the top there. The other count is to look at this low point here and go up for 1 and back for 2 here, the whole 3rd wave up through here, the 4th wave here, and looking for the 5th wave to move up through here. The 5th wave won't be very high because wave 1 here is quite small, and that's when you get the extension in wave 3. That means that wave 1 and wave 5 will be roughly the same. So we could look at this here as a little tiny 5 waves up through here, and then so wave 1, wave 2, wave 3, wave 4 and wave 5 up through here. It's either that or this is down for 1 and we've got an A and a B and a C back up to 129.20. So then if the 129 becomes a resistance after that, you can look to short from that point. Otherwise we need to find we need to allow the 5 waves to complete up here, and then we need to look for an impulse wave to the downside in 5 waves. So I'll just draw this out here. It is important. So once we count, let's just do this here. So let's get back on track here. So if this is the 5th wave going up here, we would be looking at it. That's not happening there either. So we'd be looking for 1, 2, say, let's extend it out a bit, 3, 4, and 5 here. If that was the case here, then you would be looking for a very small 5-wave structure to the downside and then a 3-wave counter trend. After you've got that counter trend, then it's good to use a supporting number. So in this case, the 129.30 would do. So you really want this that would come down through here. It will bounce off that, of course, and then it will sort of work its way lower through that point. So that retest there is what you're looking for here. And then obviously you need to work through. Don't overtrade while you're above the closest largest number. Once that becomes the resistance there, you can add there. You can also add on this 128.72. So this, and then the midpoint as well through here to add there. So there's plenty of places to build the trade in from that point there. If this just moves straight down from here and this becomes the retested resistance, then you can short from that area through there as such. So it doesn't really matter what happens. You just need to know sort of where you are and what structure's breaking down, because in this 5 waves up through here, if this market moves through the top of wave 1 here, then you know that the structure is broken down. Yep, and that would be, we use the 72 there, so that would be that. The Australian dollar is much the same really, and this is a little bit like gold as well as such, so they're all sort of doing the same thing. When markets are in sort of uncertainty or even fear, the more fear, the closer markets will vibrate together. So basically what we're looking for here in a bit of a nutshell is we're looking for the A wave, the B wave and the C wave through to here. So that's what we're looking at, and then we're looking at further downside through here. So let's just drill in and have a little bit of a look at that. This is what I drew out yesterday, so it's pretty much sort of panning out. Look, basically the A wave to here, and then an A and a B and a C for the B wave here, and then the C wave through to here. Now the C wave can go higher, but look, if the 97.72 becomes the retested resistance, it's not enough just to trade below it like that. It's, when it goes through, it's going to come back up and find it as resistance, and then you'd use the 65 to add, and then the 50 to add. So if it does that, then you know where to go from that point. Otherwise, we would be looking for a 5-wave structure to the upside in terms of the 1, the 2, the 3, the 4 and the 5 up through to here, and then that would complete that section there as well. So Yeah, so that's it. So an A wave to here, an A, B, and C for the B wave here, and 5 waves for the C. This C wave should really be quite close to the A wave here, and depending what headline news comes out of left field, so that's what you need to be mindful of. And also keep an eye on the copper market. They can relate quite closely at certain times. Okay, well, that's it. Wednesday can be a day that's down in the morning and then up in the afternoon session, and Thursday can be the profit-taking day. So you need to just consider those, and if the market starts panning out like that, then you kind of know what to do. So knowing the bullish weekly cycle just helps with the timing of things, because if today a market closes quite high, and it's at a quite a big number where it's going to have resistance, and Thursday is likely to sort of open higher and trade lower, then you might want to think about locking in a bit more at that point there. So it can be useful. Alrighty, well, that's it. So thanks for listening.